Welcome back to another investor presentation review. Today, we are looking at Venus Pipes and Tubes Limited, and this is their investor presentation. Right, Venus Pipes and Tubes. Let's dive in. The first slide is the cover, showing their facility and logo.
The next slide is the standard safe harbor statement. It essentially says the presentation is for informational purposes only and contains forward-looking statements that involve risks and uncertainties. Standard legal stuff.
Absolutely. So, moving to slide 3, we get an overview of Venus Pipes and Tubes Limited. They state their vision is to be the first reference and preference in stainless steel pipes and tubes manufacturing. Their mission is about quality and flawless service. And their core values emphasize working with the highest ethical standards. The slide highlights some impressive numbers. Over 80 clienteles from Fortune 500 companies in India, exports to more than 30 countries.
They also boast a 41% PAT CAGR from financial year 20 to 25. That's a strong growth figure.
Total installed capacity is 42,000 MT per annum with backward integration of around 14,400 MT per annum. And their market share for seamless pipes in financial year 24 is 8.0%, up from 1.6% in financial year 20. That's quite a jump. They also mention serving diversified end-user industries. The slide concludes by stating they are a manufacturer and exporter of stainless steel tubes and pipes in India.
On to slide 4. Key highlights. The presentation notes they are committed to being a leading manufacturer of high-quality stainless steel pipes and tubes.
For operational highlights, they report all-time high revenues of 258.1 crore rupees for Q4 and 958.5 crore rupees for financial year 25. A key point is the robust export growth of 3.5x for financial year 25 compared to financial year 24.
Revenue from seamless pipes/tubes grew 18% and welded pipes/tubes grew 12% for financial year 25 year-on-year. Cash generated from operations stood at 87 crore rupees for financial year 25.
They also focused on investing in human talent and expanded their product portfolio into value-added products. They recently commenced operations of 3,600 MTPA capacity of value-added welded tubes, with fittings and value-added seamless tubes coming soon.
A big win here, an order worth 190 crore rupees for stainless steel seamless boiler tubes for a thermal power project. And they received NABL accreditation for their testing laboratory.
Now for the financial highlights for financial year 25 on the right side of the slide. Revenue is 958.5 crore rupees, up 19.5% year-on-year.
Ebitda is 167.6 crore rupees, up 14.6% year-on-year, with an Ebitda margin of 17.5%.
And cash PAT is 111.4 crore rupees, up 14.0% year-on-year, with a cash PAT margin of 11.6%. Solid numbers overall for financial year 25.
Moving to slide 5, domestic market share gain. This looks interesting. They attribute the gain to capacity expansion, wider geographical reach, and strategic investment in key talent.
For seamless pipes, their market share went from 1.6% in financial year 20 with 60,000 MTPA market size to 8.0% in financial year 24 with a 110,000 MTPA market size. Their volume growth shows a CAGR of around 73%.
And for welded pipes, market share increased from 4.4% in financial year 20, market size 160,000 MTPA, to 5.3% in financial year 24, market size 210,000 MTPA. Their volume growth CAGR here is about 12%.
The notes explain that seamless pipe volumes grew approximately 8x due to backward integration and addition of smaller tube sizes. Welded pipes market share increased due to capacity addition of higher dia pipes.
Overall, company market share improved from 3.6% in financial year 20 to 6.2% in financial year 24. They aim to further increase this with new value-added products and market penetration.
Slide 6 covers geographical expansion. They export to more than 30 plus countries, listing quite a few across Europe, Africa, Asia, and the Americas.
The chart on the right shows contribution from export revenue in crore rupees. It's quite a ramp up from 6 crore rupees in financial year 20, which is 3.4% of total revenue, to 338 crore rupees in financial year 25, 35.3% of total revenue. That's approximately 56x growth in exports.
Impressive indeed. The bottom of the slide shows a formula: increase in capacity plus value-added products plus strong dealership network equals geographical expansion. Seems logical.
On to slide 7. Revenue split across segment Q4 and financial year 25. Let's break this down. For seamless pipes, Q4 financial year 25 revenue was 151.5 crore, up 22% from Q4 financial year 24. For the full year financial year 25, it was 543.4 crore, up 18% from financial year 24.
For welded pipes, Q4 financial year 25 revenue was 89.9 crore, a slight 1% increase from Q4 financial year 24. For financial year 25, it was 349.4 crore, up 12% from financial year 24.
Others category saw Q4 financial year 25 revenue at 16.7 crore, up 53%. And for financial year 25, it was 65.7 crore, a significant 124% increase from financial year 24.
So total revenue for Q4 financial year 25 was 258.1 crore, up 15%. And for financial year 25, total revenue was 958.5 crore, up 19%.
The pie charts give a visual. For Q4 financial year 24, seamless was 55%, welded 40%, others 5%. For Q4 25, it looks like the proportion for others has increased.
Actually, the pie charts show the segment split for the full years financial year 24 and financial year 25. In financial year 24, seamless was 57%, welded 39%, others 4%. In financial year 25, seamless was 57%, welded 36%, others 7%. So, others has gained share.
Ah, you're right. Good catch. Now, slide 8, revenue split across geographies Q4 and financial year 25. Domestic sales for Q4 financial year 25 were 145.6 crore, down 26% from Q4 financial year 24. For financial year 25, domestic sales were 620.4 crore, down 12% from financial year 24.
But look at exports. Q4 financial year 25 exports were 112.5 crore, up a massive 312% from Q4 financial year 24. And for financial year 25, exports were 338.1 crore, up 243% from financial year 24.
So, total revenue matches the previous slide. The commentary notes domestic sales were impacted by subdued private and government capex, but they are optimistic for financial year 26 due to new orders and upcoming product launches.
And the confidence is driven by market share gains from unorganized players and new value-added products. Exports witness more than threefold growth year-on-year, driven by strong global demand.
The pie charts for geographies for financial year 24, domestic was 88%, exports 12%. For financial year 25, domestic is 65%, exports 35%, a significant shift towards exports.
Slide 9 shows key financial highlights Q4 and financial year 25 graphically. Revenue for Q4 financial year 25 is 258.1 crore, plus 15% year-on-year, and for financial year 25 is 958.5 crore, plus 19% year-on-year.
Ebitda for Q4 financial year 25 is 41.6 crore, minus 8% year-on-year, and for financial year 25 is 167.6 crore, plus 15% year-on-year.
PAT for Q4 financial year 25 is 23.7 crore, minus 5% year-on-year. and for financial year 25 is 92.9 crore plus 8% year-on-year.
Then we have the margins. Gross profit margin for Q4 financial year 25 was 33.4%, up from 31.6% in Q4 financial year 24. For financial year 25, it was 33.3%, up from 28.3% in financial year 24.
Ebitda margin for Q4 financial year 25 was 16.1%, down from 20.1% in Q4 financial year 24. For financial year 25, it was 17.5%, down from 18.2% in financial year 24. So, margins are a bit of a mixed bag. Ebitda margin contraction is noticeable for Q4.
PAT margin for Q4 financial year 25 was 9.2%, down from 11.2% in Q4 financial year 24. For financial year 25, it was 9.7%, down from 10.7% in financial year 24. The decline in PAT margin seems to follow the EBITDA margin trend.
Let's look at the detailed profit and loss account on slide 10. This gives us Q4 financial year 25, Q4 financial year 24, year-on-year, Q3 financial year 25, quarter-on-quarter, financial year 25, financial year 24, and year-on-year numbers.
Revenue from operations for Q4 financial year 25 was 258.1 crore, up 15.2% year-on-year and 11.6% quarter-on-quarter. For financial year 25, 958.5 crore, up 19.5% year-on-year.
Gross profit for Q4 financial year 25 was 86.1 crore, up 21.4% year-on-year. Gross profit margin was 33.4%, up 170 bps year-on-year. For financial year 25, gross profit was 319.0 crore, up 40.6% year-on-year, with margin at 33.3%, up 500 bps year-on-year. That's a strong improvement in gross margins for the full year.
Ebitda for Q4 financial year 25 was 41.6 crore, down 7.6% year-on-year but up 11.8% quarter-on-quarter. Ebitda margin was 16.1%, down 400 bps year-on-year but flat quarter-on-quarter. For financial year 25, Ebitda was 167.6 crore, up 14.6% year-on-year with margin at 17.5%, down 70 bps year-on-year.
So, the full year EBITDA margin compression isn't as severe as the Q4 one. Employee cost and other expenses have increased. Other expenses particularly jumped from 19.3 crore in Q4 financial year 24 to 34.2 crore in Q4 financial year 25.
Profit after tax for Q4 financial year 25 was 23.7 crore, down 5.3% year-on-year. PAT margin was 9.2%, down 200 bps year-on-year. For financial year 25, PAT was 92.9 crore, up 8.1% year-on-year with margin at 9.7%, down 100 bps year-on-year.
They also highlight cash PAT. For Q4 financial year 25, it was 28.5 crore, down 1.1% year-on-year, with margin at 11.0%. For financial year 25, cash PAT was 111.4 crore, up 14.0% year-on-year, with margin at 11.6%.
The P&L shows a consistent story of revenue growth but some pressure on operating and net margins, especially in Q4. The full year margin impact is less severe.
On to slide 11, the balance sheet as of March 2025 versus March 2024. Total assets stand at 1008.3 crore, up from 757.5 crore.
Under non-current assets, property, plant and equipment is up to 308.8 crore from 281.0 crore. CWIP has significantly increased to 66.5 crore from 12.1 crore, indicating ongoing capex.
Current assets are up to 612.6 crore from 455.3 crore. Inventories are a big component here, up to 342.8 crore from 226.0 crore. Trade receivables also increased to 192.0 crore from 177.1 crore.
On the equity and liabilities side, total equity is 531.4 crore, up from 406.1 crore, mainly due to increased reserves and surplus.
Non-current liabilities are stable at 42.1 crore. Current liabilities have increased to 434.8 crore from 308.9 crore. Trade payables are up to 240.0 crore from 173.8 crore. And borrowings current are up to 163.5 crore from 115.3 crore.
The increase in inventories and trade payables, along with current borrowings, suggests increased working capital utilization, possibly to support higher sales and capex.
Slide 12 provides the cash flow statement for March 2025 versus March 2024. Net profit before tax for March 2025 was 125.4 crore.
Cash generated from operations was 87.0 crore in March 2025, up from 72.3 crore in March 2024. However, changes in working capital show a larger negative figure of negative 82.8 crore in March 2025 compared to negative 73.0 crore in March 2024.
Net cash from operating activities after taxes is 68.7 crore for March 2025, up from 52.2 crore.
Net cash from investing activities is negative 114.2 crore, higher outflow than negative 99.7 crore last year, likely due to the capex we saw in CWIP.
Net cash from financing activities is 47.4 crore, up from 37.8 crore. This could be from new borrowings or equity infusion.
Cash and cash equivalents at the end of the period stand at 2.9 crore for March 2025, up from 1.0 crore.
Moving to slide 13, management commentary from Mr. Arun Kothari, Managing Director. He notes strong overall performance for financial year 25 with revenues of 958.5 crore rupees, 19.5% growth. Ebitda of 167.6 crore rupees, 14.6% growth, and PAT of 92.9 crore rupees, 8.1% growth.
He highlights significant capacity ramp-up, introduction of new value-added product lines, and strengthening the leadership team.
Despite global uncertainties, exports grew more than threefold. They are deepening presence in Europe, the US, and the Middle East and are optimistic about sustaining this momentum into financial year 26. Domestic presence acts as a hedge.
They enter financial year 26 with a strong order book, including a new contract from a leading power plant equipment manufacturer. The new capacity for value-added welded pipes is operational. Fittings products are expected in the second half of the year.
He concludes by saying they remain focused on executing their growth strategy with agility and resilience, confident in delivering sustained value.
The next section, starting on slide 14, is historical financial highlights.
Slide 15 shows key historical financials graphically from financial year 21 to financial year 25. Revenue grew from 309 crore in financial year 21 to 959 crore in financial year 25, a CAGR of 33%.
Ebitda grew from 35 crore in financial year 21 to 168 crore in financial year 25, a CAGR of 48%. PAT grew from 24 crore in financial year 21 to 93 crore in financial year 25, a CAGR of 41%. Consistent growth trends.
Looking at margins, gross profit margin improved from 15.5% in financial year 21 to 33.3% in financial year 25.
Ebitda margin improved from 11.2% in financial year 21 to 17.5% in financial year 25, though it peaked at 18.2% in financial year 24.
PAT margin also improved from 7.6% in financial year 21 to 9.7% in financial year 25, peaking at 10.7% in financial year 24. So, while there's long-term margin expansion, financial year 25 saw a slight dip from financial year 24 highs.
Slide 16 presents the historical profit and loss account from financial year 21 to financial year 25 with CAGRs. Revenue CAGR is 32.7%. Gross profit CAGR is a strong 60.6% with gross profit margins expanding by 1,800 BPS over this period.
Ebitda CAGR is 48.1% with Ebitda margins expanding by 630 BPS. PAT CAGR is 41.1% with PAT margins expanding by 220 BPS. These are strong multi-year growth numbers.
Slide 17 shows the historical balance sheet from March 21 to March 2025. Total assets grew from 137.5 crore in March 21 to 1008.3 crore in March 2025.
We can see property, plant and equipment and CWIP growing significantly, reflecting capacity expansions. Equity has also grown substantially from 39.9 crore to 531.4 crore.
Borrowings, both non-current and current, have increased to fund this growth, but equity growth has been robust too.
Slide 18 is the historical abridged cash flow statement. Cash generated from operations has fluctuated. 12.1 crore in financial year 21, negative 49.0 crore in financial year 22, negative due to large working capital changes. 27.4 crore in financial year 23, 72.3 crore in March 2024 and 87.0 crore in March 2025.
Net cash from investing activities shows significant outflows in financial year 23, negative 167.4 crore, March 2024, negative 99.7 crore, and March 2025, negative 114.2 crore, aligning with their capex phases.
Moving to slide 19, key return ratios. ROE was 25% in financial year 22, then 21% in financial year 23, 21% in financial year 24 and 19% in financial year 25. The note says this excludes funds raised via IPO and share warrant for capacity expansion.
Debt/equity ratio was 0.5 in financial year 22, came down to 0.3 in financial year 23 and then 0.4 in financial year 24 and financial year 25. So leverage seems manageable.
ROCE excluding CWIP from total capital employed from financial year 23 to financial year 25 as per note was 35% in financial year 22, 31% in financial year 23, 32% in financial year 24 and 31% in financial year 25. These are healthy return ratios.
The next section starts on slide 20, Capex update.
Slide 21 details Capex Update 1, foraying into fitting solutions. They are diversifying their product portfolio to include fittings to offer complete PFF, piping, fittings and flanges solutions.
They expect faster approvals due to their track record. Fittings are complementary to the pipes business with low competition, giving them a strategic advantage.
And interestingly, internal wastages/scrap from pipes business will be raw material for fittings, enhancing profitability. The slide states fitting companies play a vital role in industrial processes.
Slide 22 gives fitting project key highlights. Product range will include elbows, T's, reducers, joints, flanges. They'll work with various metals.
Customization services will be offered and quality assurance will be strict, complying with industry regulations. They expect faster approvals due to strong relations and track record. The images show various types of fittings.
Next, on slide 23, Capex Update 2, Value-Added Welded Tubes. They are introducing a specialized product line of stainless and titanium welded tubes.
This is positioned as a low competition area due to high precision engineering, offering revenue growth and margin improvement. These tubes are for demanding industrial requirements.
They'll manufacture hygienic SS and titanium-grade tubes, allowing diversification into food processing, pharma, nuclear, and power sectors. This should lead to increased market dominance and value-added premium products.
Slide 24 outlines the financial contours of this capex. Phase 1 involves fittings and welded tubes. Phase 2 is seamless pipes, slash tubes and piercing line.
Margins for these are expected to be in high teens. Asset turnover similar to current, return ratios are non-dilutive.
Total project cost is rupees 175 crore, with commencement expected by H2 financial year 26. Funding is approximately 40% from warrants to promoters and others, and approximately 60% from term loan and internal accruals.
They highlight that these value-added lines present a high ROCE opportunity. A note mentions that the 3,600 MTPA welded tubes capacity was operationalized in May 2025, and fittings capacity will be completed in H2 financial year 26.
The next section on slide 25 is company overview, which seems like a deeper dive or perhaps a recap.
Slide 26 details product portfolio and applications. They manufacture as per international standards. Products include stainless steel high precision and heat exchanger tubes, hydraulic and instrumentation tubes, seamless pipes, welded pipes, and box pipes.
Applications are vast. Heat exchangers, pressure vessels, chemical and fertilizer, marine equipment, oil and gas, process industries, nuclear power, dairy/pharma, automotive, aerospace, OCTG, and structural fittings like in factories and warehouses.
Slide 27 shows multiple end-user industry, with images representing chemical, engineering, fertilizers, pharmaceutical, power, food processing, paper, oil and gas, and aerospace. Reinforces their diversification.
On slide 28, state-of-the-art infrastructure. Their manufacturing facility is at Dhaneti, Kutch, close to Kandla and Mudra ports. The facility is on land measuring over 2 lakh square meters. Pictures show a large modern plant.
Slide 29 talks about with stringent quality inspection and testing. They have a rigorous system. Destructive tests include tensile, hardness, IGC, reverse bend, flattening/flaring. Non-destructive tests include hydrostatic, eddy current, air underwater, spectro, and borescopic tests.
Slide 30 showcases their marquee clientele. A lot of big names here. ADNO, Aarti Industries, Adani, Reliance, GAIL, Patanjali, BHEL, Cipla, Coromandel, HP, ISGEC, ISRO, ITC, Tata Projects, Voltas, Divi's, Asian Paints, Amul. It's a very diverse and strong client list.
Slide 31 lists awards and certifications. They have ISO 9001, 14001, 45001, AD 2000 Merckblatt W0 by TUV Nord, Indian Boiler Regulations approval, and BIS approval for stainless steel, seamless and welded pipes and tubes. Certificates are displayed.
Slide 32 introduces the experienced board of directors. Arun Kothari, Chairman and MD, Jayantiram M. Chaudhary, WTD, Megharam S. Chaudhary, WTD, Dhruv M. Patel, WTD.
Independent directors are Kailash Nath Bhandari, Pranay Ashok Surana, Komal Lokesh Khadaria, and Shyam Agarwal. They all have diverse and relevant experience.
Slide 33 details the strong management team, largely repeating the WTs from the previous slide and adding Kunal Bubna, CFO, Pawan Kumar Jain, Company Secretary, and Kumar Shashir C. Sinha, President Marketing.
The next section starts on slide 34. Strategies to support growth, with an image of pipes as the arteries of industrial flow.
Slide 35 covers capacity expansion and backward integration. A chart shows finished products capacity, MTPA, growing from 6,900 MTPA in financial year 19 to 2,100 seamless, 4,800 welded to a projected 42,000 MTPA by financial year 26, 14,400 seamless, 27,600 welded. That's approximately 6x expansion or 3.5x from a certain base, it seems.
The completed capacity expansion table details current versus previous capacities. Seamless is now 14,400 MTPA, 6 to 219.3 mm size from 3,600 MTPA. Welded is 27,600 MTPA, 6 to 1,422.4 mm size from 8,400 MTPA.
And importantly, Mother Hollow backward integration for seamless pipes is now approximately 14,400 MTPA, up from zero. This is key for their seamless pipe production.
Upcoming capacity expansion. Phase 1 value-added fittings and welded tubes with rupees 115 crore capex to be completed by H2 financial year 26. For fittings, welded tubes operational May 2025. Phase 2 value-added fittings, welded/seamless pipes/tubes with rupees 60 crore capex, timeline H2 financial year 26.
Slide 36 gives the key takeaways.
First, capacity expansion, expanding existing manufacturing for welded and seamless pipes/tubes, including titanium grade and foraying into value-added fittings.
Second, backward integration. Installed piercing line for 14,400 MTPA hollow pipes from SS Roundbar.
Third, geographical expansion, deepening presence in EU and making inroads in US, Middle East and African markets.
Fourth, better efficiency. Installed an acid regeneration plant ARP to reduce acid consumption and improve operating margins.
And fifth, brand value, consistent efforts to strengthen the Venus brand and enhance visibility.
Finally, slide 37 is the thank you slide with contact details for the company, Mr. Kunal Bubna, CFO and Strategic Growth Advisors SGA.
So, Venus Pipes and Tubes appears to be on a strong growth trajectory, fueled by significant capacity expansions, backward integration, a push into value-added products, and a keen focus on exports. The financials show robust top-line growth, though margin saw some pressure in financial year 25 compared to financial year 24 peaks.
The capex plans are substantial and their successful execution will be key. The diversification into fittings and specialized tubes seems like a smart move to capture higher margins and new markets. Definitely one to watch. That wraps up our review of Venus Pipes and Tubes May 2025 investor presentation.